Aloha folks, welcome back to another video. My name is Mark, Mr. Dividend Investor. Today let's talk about three companies that I personally own in my portfolio. Wanted to share with you these companies. Companies are General Mills, Kroger, and Altria. So hopefully you'll sit tight, enjoy the video, see what I'm looking at, see what I'm thinking. So definitely, hopefully by the end of this video, you'll like what you see and you subscribe. And please hit that like button. Really helps the channel grow. Also, please remember this is not a financial advice. I ain't a financial advisor. This is just my opinion. I just want to share you what I'm thinking, what my process is in terms of why I like this company. With that said, thank you for checking this out. Let's take a look at these companies. So first one, General Mills, ticker symbol is GIS. So what I really like about this company is very diversified. So if you look at all the products that they have more than 100 products and more than 100 companies in 6 continents. So they go from cereal, donuts, dough, pastries, ice creams, pastas, pizzas, snacks, soups, spices, and vegetables. So, what makes me attracted to this company is regardless of what is going on with the market, people are always going to buy cereal. So it's always going to be a need. They're always going to buy these products. So that's why I like it. And that's why I feel that it is a great company to invest on. Now, if we look at the Yahoo Finance, again, please remember that this is not I'm not a chart master. This is just basic looking at the charts. So year to date, you can see it's pretty like up and down. Market cap is 35 billion. 52-week range 66 is the high, 46 is the low. Look at the performance outlook. It's kind of flat long term. Looking down to the earnings, you can see it's beats pretty much 4 out of 4 quarters. The financials is really good. You can see that the revenue is 17 billion, whereas the earnings is 2 billion as well. The trends for this stock is basically a hold. The ratings is pretty much a hold as well. It's pretty cheap right now with the average of 64. Now, if we look at Simply Safe Dividend, you can see it is a safety score of 69. Dividend yield is 3.39. Again, market cap is about 35 billion. The beta is 0.44. Looking down to the key matrix, so what I like about it is the recession dividend increases from 2007 to 2009. Dividend streak is 30 plus years without a reduction. So if we go down even to the dividend growth, I like the fact that you can see the upward trend. So dividend growth streak, so it's 0, but the uninterrupted is 30 plus years without a reduction. So that thing is, I like that. You are going to get paid quarterly, which is in the February, May, August, and November. The annual payout would be $1.96. So that is for General Mills. Now, if you look at the bar chart, you can see analysis price targets is the high is 71, the low is 50. Current trends right now is moderate buy based on 13 analysis. So you can see down that the current buy is 4 strong buys, 8 holds, and 1 strong. So it is, for me, I like this company. I'll definitely invest in this company. I think it's a great one. I did buy a couple more shares this month. I'll continue to go buy more shares since once it dips. So moving on to the next one, which is Kroger. Definitely like this company. Um, it is kind of similar to Walmart. It has a lot of grocery stuff that you can purchase. Usually they're pretty cheap. Um, being in Hawaii, you can. It's so awesome to see a $2.99 again. Um, Here in Hawaii, it's expensive, so nice to see that it's $2.99 in the mainland. But other than that, you get all these um, menu. You can get the stores, so it's basically grocery stores that I definitely like. This is a company that has been doing great with the current pandemic. People are going to always shop for groceries regardless of how the market is. That's why I like about it. Now looking at the Yahoo Finance again, you can see it has been up and down. It's in a steady increase. Market cap is 25 billion. 52-week range, 37 is the high, 23 is the low. Now performance outlook, long term it's bullish. Going down further to the earnings, you can see 3 out of the 4 earnings is a beat. Looking down to the financials, you can see pretty good, really good upward stuff. So revenue is 122 billion, the earnings is 1.6 billion. So the trend is a mixture of strong buy to buy and hold. Recommend rating is between a buy and a hold. So it's pretty much low on the average. Now looking further to the Simply Safe dividend. Dividend score is a 71, which is safe. Dividend yield is 2.15. So again, the market cap is 25. Now, what I like about this again, if you look down, is the recession dividend increased. So that's something that I like going further. Again, I love the fact you can see a steady growth. I think that's what I always look for. Interrupted dividend streak of 14 years without a reduction. So definitely something that I like. Now looking further, you will get paid quarterly. March, June, September, and December is your quarterly payments. The annual payout would be 72 cents. So I like companies that pay dividend of 10 plus years or more. So this is one of those companies. Now, if you look further to the bar charts, you can see based on this analysis, you can see that it is a moderate buy with 16 analysis. So definitely something to look at. There's 5 strong buys, 10 holds, and 1 strong buy. So for me, I like this company because again, like I said, regardless of what happens in the market, people are always going to go and shop for food. So that's something that I always look for. So definitely I purchased a couple more because it went down. I'll continue to purchase a couple more when I see it go down even further. So the last one on the list is Altria. So this is a company that does a lot of tobacco. So it is called, some call it sin stocks. I like it. I think it's a great company to invest on. I think the dividend is awesome. I think the dividend is great. So quick rundown on this company. So if you look at the Yahoo Finance again, it's kind of flat, as you can see from the way the chart is. Market cap is 72 billion. 52-week range, 51 is the high, 30 is the low. Long term, it is um, a bear, but for me, I'm still gonna purchase and buy this company. Um, Earnings, you can see three beats and one meet. Financials, you look at the revenue. The revenue has been steady high with a revenue of 19 billion. 2018 was a 19 billion as well. Now looking further, you can see the recommend trends is between strong buy to buy and a hold. Rating is between a buy and then the price target is in the low side. So for me, this is a bargain. So, I've been purchasing a lot more in my other portfolio. Looking at the dividend safety, you can see a borderline safety of 55. Dividend yield is 8.8%. Looking further, you can see again, recession dividend has been increased. What I really like about this is that if you look further, it is uninterrupted dividend streak of 50 plus years. So it's been 50 years and more without them reducing or cutting the dividend. So schedule wise, you'll get a quarterly, January, April, July, and October, with an annual payout of $3.44. If you look further to bar chart, you can see that it is currently moderate buy based on the 10 analysis. Now, 5 strong buy, 1 moderate, and 4 holds. So again, this is definitely a company that I'm going to invest on and continue. So one of my favorite companies. With that said, thank you so much for watching. Definitely hit that subscribe button, hit that like button. Really helps the channel go out. With that, thank you so much. I'll talk to you guys on the next video. Stay cool, be safe out there, and definitely keep investing. I'll catch you guys later. Aloha.